there is this famous investor, Lulu, who's Charlie Munger's protege, and he was an early investor in Capital IQ.
Mm.
And I remember him saying, even though investment worked out very well for him, it was incredibly tough to compete with Bloomberg. I'm curious, why did you decide to compete with both of them and some others? What's the story behind it?
Yeah, it's interesting. I met one of the founders of CapIQ, Randy Wynn, and I thought he was going to be so interested in investing in Koyfin. He's like, "What you're doing is really hard. Don't do it." I was just like, "Oh man." Yeah. So the backstory of why I started Koyfin. Prior to Koyfin, I was on Wall Street for about 15 years. I started at Goldman Sachs Research on the sell side, and I was on a trading desk there. Moved to Citigroup, was on a trading desk there, looking at ETFs and thematic ideas. And then I worked at a number of hedge funds after that. And throughout my career, I was always using CapIQ, Bloomberg, Reuters, FactSet, all the kind of fancy tools out there. I was also kind of the person on the desk that was always putting together the data, connecting different data sources, basically coming up with trade ideas, but maintaining all the infrastructure as well. And then I also started being interested in just data visualization and graphing and how you present and how data looks. And that's something that I started looking at and thinking about earlier on. And kind of all those things led me to want to create a better mousetrap for investors. And in 2016, I left Wall Street and started Koyfin to create a quote unquote Bloomberg Light. And Bloomberg Light means just so many things because Bloomberg means so many things. Bloomberg has a million different functions and a million different data sources. And nobody uses Bloomberg to its full potential. But what's interesting about Bloomberg is that you have different personas who use it in a way that makes sense to them. So if you're a credit trader, or if you're a options trader, or if you're a macro trader, or if you're an equity analyst, there's some base functionality that you'll use, like news and maybe prices, and then there's kind of more particular data. And of all the platforms out there, I think Bloomberg does a really, really nice job of pulling together a lot of different data sets into one place. So not just focused on a narrow data set like equities or mutual funds, kind of has everything. And then the second thing is Bloomberg does have the best analytics out of all the softwares out there in terms of actually visualizing the data, graphing the data. And so they do a pretty good job. And Bloomberg was actually one of the first ones to start, over the past couple of years, like shortcuts, keyboard shortcuts came back into vogue as people just figured out it's much faster to do shortcuts than doing a mouse. And Bloomberg's been doing shortcuts basically because they were invented before the mouse existed. So they started with shortcuts, and that's how the system works. And so I thought about some of these kind of interesting concepts that Bloomberg has and wanted to apply them to this modern version of Bloomberg or Koyfin as I was building. But I wanted to make it more modern and more intuitive and more accessible. So obviously Bloomberg's at the high end of the range at $30,000 or $35,000 a year. I thought that there could be a platform that's lighter weight, that's for more investors, that's accessible to more people, that really sells itself through product-led growth and through a freemium business model. And that's something that was really important to me, is have a product that was free and let the product do all the acquisition, the actual customer acquisition. And so we've always had a free version, and a lot of our users are only on the free version because it's so powerful. So that's where kind of like the idea of Koyfin started from, and how it came about.
That's kind of interesting. So do you have a software engineer background?
I don't. I have just a little bit of quant background, doing stupid, like whatever.
Whatever they do.
Yeah, whatever they do, just like, I think I actually have my comp sci minor, but not like a engineering background to the extent of programming. One of the things that was very challenging is actually starting a software company when you don't have any software background. It's really kind of like a new universe because I don't even know what I don't know. And so just really learning and digging. I'd say the one thing that really encouraged me was there were all these newer products that I started seeing on the market that were doing really, really cool things. So for example, I don't know if you've ever used TradingView. It's used for technical analysis. So they have great price charts, like a lot of great price charts. And it's a web-based software, and it just beautifully designed. And back when I was starting Koyfin, I found it. I was just like, I can't believe you could do this stuff on the web. Like I thought the web was like Yahoo Finance, just like pages and load. And I started looking at these companies that were building applications on the web, and there were all these frameworks that were just starting to get going.
Mm-hmm.
We were lucky enough to launch Koyfin when React started being popular, and so React makes it just really efficient and really quick to create web applications. React was is an open source language that was started by Facebook, and then is now probably the most widely used framework to create applications. And so, we were very lucky that these technologies existed. But as I started exploring the stuff, my impression was that you really need smart engineers to kind of like build the stuff. And what I started learning when I would speak to engineers, like, how's this built? How's this built? Engineers would be like, look, you just need a good product person to describe what you want to build. And then like there's ways to build this stuff. Like it's not like the brilliance isn't building it. The brilliance is actually on the product side. And actually figuring out what the UX looks like and how the pieces work
Mm-hmm.
together, and the little things. And this kind of like product role or product framework in a company I'd never encountered before, coming from Wall Street. I didn't know there was such a thing as product. Like I didn't know what that meant. I thought it was just kind of engineers building stuff. And so that really gave me the confidence to kind of say, like, if you have a vision for product and you find competent, smart engineers, they can build that product, but you have to sort of build the blueprint and explain what you want to build.
So here you are working on Wall Street and you're already on hedge funds. One day you realize that you want to leave it all and try this startup. What was your thinking? Like, if doesn't work out, I'll go back, or did you even think that you might fail? Like, walk me through your thought process there.
Yeah, it was definitely something that was incremental in general. So it wasn't like, I mean, one day I decided, I was like, this is going to be it. For about a year, I was just exploring the possibility and thinking about it. I really kind of was at a point in my career where I wanted to do something, think about like what's next,
Mm-hmm.
and think about kind of like, what am I doing now and where's this going, and what do I see, like if this is a good scenario and this is a bad scenario, and am I happy, and kind of like my roles on Wall Street and my time on Wall Street, I found really interesting and really challenging. And I love the market. I love trying to figure out how to beat the market. I love the intellectual challenge of that. I think working on Wall Street, you work with a lot of smart people, but you're not really building anything, and you're not really
Mm-hmm.
kind of producing anything. And so so it's a different kind of it's a different kind of role. And I thought it'd be really cool and interesting to build something is one. And the second thing is I wanted to start my own company just because I function better when there's pressure on me to do things rather than working for someone else and
Mm-hmm.
operating in kind of like a more, where I'm a cog in the machine. So that was something that I know kind of motivates me a lot more than working in a company. And so that was another kind of motivation to just start something and do it, be responsible for driving it forward.
You said you're married and you have kids. Were you married and had kids back then too, or no? When you just started?
Yeah, definitely not, and definitely was a big part of kind of that decision. And having some financial means after being on Wall Street for a number of years. We didn't have any VC funding in the beginning because it
Mm-hmm.
was just kind of me and several engineers. So I was bootstrapping the company myself, and I was in a position where I didn't have a lot of financial obligations, or kind of a family to support. And if that were the case, then there's no way that I would have taken that risk.
So you started, you said you had several engineers. Why did you have several? Like at that point, you realize that you need several? Like who walks you through what you need at that point? Because you don't have a technical background much, right?
I was trying to meet a co-founder for a long time, like a technical co-founder,
Mm-hmm.
and didn't really find anyone to join me, and started basically using a dev shop to build the MVP. And so I found a dev shop that was pretty good at data visualization, and I built some other products related to data visualization. They were based in Ukraine. I'm originally from Ukraine, but that had nothing to do with the dev shop being there. And I just basically said, like, look, well, I'm gonna devote a year to this and see
Mm-hmm.
what happens. That's kind of like the first window that I want to see if we can get any kind of success and traction. And then, things just started kind of coming together. It was really, really slow and hard just because I, again, had never done it.
Hmm.
Like I remember the first like 3 months when stuff was being made, I was like, this is just looks really ugly. Like, how do we make this like better looking? And they're like, well, you have to hire a designer. I'm like, what? Like, why can't you guys design? Like, why do we have to hire a designer? This is crazy. In retrospect, it just sounds like really naive and stupid, but just figuring out kind of the different roles of product and design. And within 6 months, we had something. We had something basic that was charting fundamentals and had like a news feed. And I was like, this is great. I think it was one of these things where I looked at it differently than other people looked at it, because when other people looked at it, it was like really ugly and bare bones. And when I looked at it, I was like, if I can do this, I can get it to a better point. Like I
Hmm.
like that. This is amazing that I can like I see the future where this is going, and that's what excited me. And I think that's kind of like what motivated me to continue to build it. And like looking at some of the first designs and first products we had, and they're just ugly, and they're just like really not even bare bones. Like bare bones could be nice when it's simplistic, but it was just a really rough product. And so I think the fact that we were continually innovating, continually improving, which is what we do today as well, that's the most important thing.
So you created this MVP, or is it minimal
Mm.
viable product, right? Who was the first person testing it, or were you just relying on your intuition before going out to the market?
So I was building the product for me in a lot of
Hmm.
ways. So in a lot of ways, the product today in general reflects kind of how I look at the market, which is from a macro and from a company perspective, and very much focused on charting and data visualization. So that was kind of the early product that we were building. And so it helped me when I was building the product. I was giving feedback in terms of what I thought was good, what I thought was not good. In terms of getting like our first users, it was my network. And then we were lucky enough to just get on FinTwit on Twitter and start
Yeah.
promoting, posting charts and posting these data visualizations. And some of the workflows, even though the product itself was pretty raw and basic, the workflows that we were enabling just didn't exist in a lot of places. So, for example, graphing the PE ratio over time. And when we were starting in 2016, 2017, you couldn't do that on a Yahoo Finance or on a brokerage app or anything like that. Today, there's more companies that are enabling that, but that sort of kind of time series data visualization analysis just wasn't available at the time.
Hmm.
So even though the program was really bare, people that saw it were like, "Wow, you could do that. That's pretty cool. I want to do that," and started using it. So I still remember when we had under 10 users and we were trying to get to 50 users and really kind
Hmm.
of fighting to get there. I remember presenting at like a Columbia Business School class and presenting and Koyfin and going through a demo, and then our numbers like doubled the next day, and our team was like, "What's going on?" I'm like, "Oh, I presented to a class. Don't worry, we're not going viral." But we were small enough where that like literally just moved the needle, and a lot of it was just on Twitter and my network, and just trying to get people to use it and get feedback. And it was really nice because once we had several hundreds of users, we started seeing where people pressing, or what are people doing, like what are the things
Mm.
that they're focused on. That was now a new piece of feedback that we could use to improve stuff and move forward. So that was nice.
Who was your first paid customer? Do you remember?
I had this thesis, this idea that Koyfin needs to have all these different data points and has to be like this really versatile product that lots of different people could use. And so, before we started recording, you mentioned this interesting phrase that if you're not focused on anyone, you're focused on no one, or sorry, maybe you could probably articulate that quote better than I can. But the concept there is like you need to focus as a business. If you're not focused, you're just going to vanish because you're not catering to anyone. And I think naively, we didn't focus on anyone. We wanted to do everything. We wanted to do fundamentals and macro data and econ data and ETFs and mutual funds. And that took a long time to build. And as we were building it, the MVP was out there and it was totally free. And we just kept adding functionality and functionality. And it was just free and then more and more functionality. And so you could imagine a free product people use, especially, when it's like
Yeah.
doing something useful for them. So we started growing nicely, and people were very confused why it's a free product. And we had to actually go and explicitly just say, like, look, this is not going to be free forever, but it's free for now. That's so people felt a little more comfortable that we're not like stealing their data or monetizing them somehow else. It took us a while to kind of build that vision of having all these different data sources. We started dealing with global data and currencies, and that took a while to figure out, especially for a pretty small team. We were bootstrapped till about 2019. In 2019, we got our first VC check from Craft and Social Leverage. So we were able to start scaling out a bit faster then. And then 2021, we started monetizing the product. So before that, it was completely free. And June 24th of 2021, we basically had free and then paid tiers. So I don't remember who like our official first user is, but we had, several hundred people convert on the first kind of day, and started kind of monetizing our free user base pretty quickly because we had that free user base to monetize.
So for 3 years, you were relying on yourself from 16 to 19 to finance all the operation of the company, right? Because there was no revenue. And then finally VC came.
Yeah, mostly we did raise a small friends and family round
Gotcha.
right before that, but it was mostly self-funded until then. I didn't take a paycheck from the company until we got our VC investment. So
Man, that's tough. That's why I do it when you're single without kids.
that's right. Or be born in a really rich family.
Um, okay, half of people dropped off this podcast already. Good
Yeah,
job.
well, that's just advice. If you're not, don't worry. I understand.
Walk me through what's happening on the background, because there are so much information in there. Like how is that information being accumulated and categorized properly? Like how is it I'm able to pull up so much information and it's going to be in exactly the right spot? I don't understand it. Like, is there somebody who's checking if P is calculated correctly?
One of the kind of important things about Koyfin that I wanted to do was have professional grade data sources powering Koyfin. A lot of startups have tried to get into the space from Silicon Valley
Mm-hmm.
without having an appreciation of the data sources or really an understanding of kind of like what the different data sources are, and sort of maybe naively thinking net income is net income or revenue is revenue if you pull it from the SEC website or whatever it is. And there's just so many little exceptions and accounting rules and things you have to adjust for. So right away, we thought it was really, really important to get a very high quality data source for a product. And luckily, Capital IQ had just started to license some of their data. So we get our fundamental and estimates data from Capital IQ. So we don't actually have a team that's calculating the revenue or the P or anything like that. We are pulling that data in from CapIQ. And then we are making sure that the data talks to other data providers. We're making sure that there's some kind of checks and balances. We're making sure that it's updated regularly. So it's not like we just kind of like press a button and it comes in. But we're not the primary data source for the data. We have about a dozen data sources today that's powering Koyfin. And I'd say the challenge is having all those data sources speak to each other on the back end and making sure that they're cohesive. And because we set that up in a really efficient way, we're able to do some cool things. Like, for example, we just rolled out a feature where we're calculating the PE of ETFs or the valuation of ETFs historically. And we're doing that because we have the fundamental data from CapIQ. We have holdings data from other data sources. We have a way for those data sources to talk. So that's like a really interesting data set that doesn't exist in a lot of places outside of FactSet or Bloomberg, where you can look at the P ratio over time for NASDAQ or SPY, or look at EV to EBITDA or EV to sales or whatever it is. But the actual underlying data, particularly on the fundamental side, which is probably our most important data set, comes from CapIQ.
And you mentioned there are like several other data sets that you cross-check. Is it just for cross-checking information, or also backup in case if Capital IQ decides to stop selling the data for some reason?
Yeah, so today we don't have any redundancy in our fundamental data, and that's because we have a long-term contract with CapIQ, so
Gotcha.
we have visibility. But if CapIQ one day decides that they don't want to partner with us, we probably need to figure out one of the other competitors to work with, like FactSet or one of the other ones.
Oh, there are quite a few actually. Yeah, you're right. If you could describe your ideal client, who is that? Is it like individuals who want to invest on their own, or just small shops, or people who actually have Bloomberg, but for some reason they just want to use Koyfin?
If I were to describe Koyfin in a nutshell, it's built for professionals, available to individuals. This is kind of how we think about it. And so what that means is our product is pretty advanced. And so if you're a novice investor, if you're just starting your investment journey, Koyfin could be overwhelming because you might not know why you would look at a financial statement or balance sheet or graph, or look at a time series of valuation or margins, or look at estimate revisions, or all these kind of things that a more advanced investor would do. And so because we started with a free version, because we are priced pretty accessibly in terms of our price point, we do have a lot of individuals using Koyfin. So the individuals are typically fundamental investors. A lot of them used to work on Wall Street and now don't. We definitely see the persona of the person used to have Bloomberg but doesn't anymore. We also have a lot of individuals, particularly software engineers that like to invest their own money and really have high disposable income and are a little bit more quantitative and tend to not want to outsource their financial management. So that's kind of like an interesting use case. But when we started monetizing and really looking at the data and who's paying for Koyfin and how often they're using Koyfin, there were really kind of two groups that stood out. One were the fundamental investors, and the other one were financial advisors. And the financial advisor segment is really interesting for us. It's the segment that really has the lowest churn, the highest spend. It was surprising to me because I had no idea what financial advisors do. But they started using Koyfin for the same reasons that fundamental investors use Koyfin, which is kind of looking at stocks and ETFs and macro. But then now they have other workflows that they're asking for that we've been delivering that don't apply to fundamental investors. So it's kind of interesting, kind of going deeper into that workflow that doesn't really address or doesn't really relate to other personas on our platform.
It sounds like you have this product-led growth, right? You let marketing play the major role, but do you have salespeople who go after these financial advisors, or not necessarily?
Yeah, we don't really have a sales motion today. I'm doing a lot of the product-led sales. We did hire someone on the sales team to kind of start that process, but the vast majority of our sales today are what we call self-serve, where people come to our website because they heard about us, they read about us, they Googled us, they saw a chart that was created using Koyfin, and then they sign up for the free version, and then they upgrade for the paid version. We do have a enterprise contact us form, so people do reach out to us, and we have closed enterprise deals that way. When I do demos and I get client feedback, I tend to kind of pry a little bit to see what they're using, if there's an opportunity to use Koyfin. So we've closed some deals that way as well. About 8% of our revenue today comes from what we call enterprise, which is kind of speaking to someone and getting a multi-license deal. But the vast majority of the revenue is self-serve.
Obviously, you start signing people in, and at some point you realize you need customer service, right? Customer success, whatever you guys call it. When did you guys realize it, and when did you hire your first person who would be taking care of all these questions?
So it was very important for me to do customer service in the beginning. I still do a lot of customer service. So I read probably every single help mail that comes in, and just to kind of see what people are asking about, what the issues are. We did hire a person about, I think, 2 years ago to start helping me, and she didn't know finance at all, but she's smart and organized, and so she really started, really an understanding. And now, if someone's asking about adjusted EBITDA versus unadjusted EBITDA, she knows what that means. And so I'd say like a lot of the some of the questions that helped us, there's an actual answer. You just have to go look for it. She'll help me handle, and a lot of the other questions that are a little more strategic, or how do you, or maybe feature requests, then I'll handle. And now with ChatGPT and having kind of like an AI system that takes what you've answered before and crafts new answers, I think that's going to be very efficient for us going forward.
Is ChatGPT a problem for you guys? Can't I theoretically just, instead of going to Koyfin and checking EBITDA for the last 10 years, just ask ChatGPT what was EBITDA for the last 10 years for a particular company?
Yeah, you can. And it depends on your workflow, right? So if your workflow is, I want to know the EBITDA for the past 10 years, then you could get it from Google, ChatGPT, Yahoo Finance, a lot of other sites. But if your workflow is that you want to look at the EBITDA, but then you want to compare it versus the oil price and the copper price, and you want to actually pull up the gross margin, and you want to lead and lag, and you want to start kind of understanding what the drivers of the EBITDA is, then that's a different workflow, right? That the ChatGPT probably isn't there to tell
Mm-hmm.
you what that is, at least now. Or I think the whole interaction of a person with a computer through an application, through software, obviously only like 30 years old, right? So it might not be the best way. Like maybe the best way is through text, and we just don't know it yet. But I think people today are used to working in Excel and working in a SaaS application. And there's a lot of power and there's a lot of benefit to that,
Mm-hmm.
because you actually see the underlying assumptions and you see how things are connected. And, it's always present there. What ChatGPT is good at is just giving you the answer. And
Mm-hmm.
it again depends on the use case. Sometimes you just want to know the answer. But other times you want to have that data. Now, if ChatGPT could give you the answer of which stocks are going to perform well in the next year, then that's great. You don't need that SaaS program, right? ChatGPT will go in, do all that work, and be like, I think Tesla and IGV, and give you a list of stocks, and they're going to outperform, and it does the calculation of how it does in the background. But that's not what an investor does, right? An investor has to, like, an investor does at the end of the day come up with what they believe is going to outperform or underperform, but then there's a risk associated with it. There's different scenarios. There's a portfolio construction. I think it's very naive to say like the job of an analyst or an investor is to say buy or sell. Like that's just not, like, when you start understanding what investors do in the investment process, that very easy answer is not actually what an investor is trying to do. They're trying at the end of the day to put probabilities around things to understand where they could be wrong and not wrong, because you're trying to predict the future, and predicting the future is very, very difficult.
So the way I found out about Koyfin, like I've heard about you guys, but I didn't kind of try it. But I had the guest, uh, Tim Sturmos. He has a fund and he invests in African continent only
Mm-hmm.
in different markets. And I asked him like, what source of information do you use? He said
Mm-hmm.
Koyfin among others.
Mm-hmm.
So typically when I edit my interviews with investors and they invest internationally, I want to put the chart of the stock they talk about, and it's
Mm-hmm.
always like I have to go to 5 different websites to get this stock chart.
Mm-hmm.
And for him, when I was editing his interview, like I couldn't find the Kenyan stock markets or anything else like in
Mm-hmm.
one spot. And that's when I tried Koyfin and I found all the obscure companies he was talking about. I'm like, crap, this is good. This is good. So I tried it myself and I sent it to my friends because I kind of, it was free option. Like I said, like, hey, check it out. Then I'm like, well, yeah, I'm gonna promote these guys. Let me see if they have affiliate links. I
Yeah.
reached out to you guys on Twitter, as you said, you guys use it. Somebody quickly reached out to me and set me up very quickly. I asked them, I think it was Connor, his name. I asked him like 50,000 questions because I don't understand. Like you said that it's pretty complex
Yeah.
there's a lot of optionality and he helped me out through everything. I'm like, man, this is pretty good. I'm like, can you give me a free trial so I can know what am I gonna be suggesting? And he set that up. I'm like, okay, these guys, whoever built this thing knows the product and clearly knows the customer service. That's why I invited you. I want to talk to you guys behind it. So I'm curious, are you that nice to small YouTubers or are you nice to everyone?
We're nice to our customers for sure. We're still thankfully at a point where we have very close relationships with a lot of our customers, because they give us feedback. They're the ones that, again, we're growing and spreading through our customers, and by building a product that people feel comfortable recommending, and are passionate about recommending, and that's awesome. And I really hope we're going to have that ethos and that value even as we grow and get bigger. But yeah, we're coming up with our values over the past year. Customer centric, customer first was kind of the first value everyone agreed on, that we love talking to our customers. We love making our customers happy. I'm a big believer of you should just offer more than you ask for, because ultimately that's just going to be beneficial to you selfishly, right? So if when you check into a hotel and you get a gift, you're just like, wow, this is really nice and something unexpected. And so for us, we just want to delight customers, give them a little more than, or a lot more than they expect, and ultimately that'll pay dividends selfishly.
Can you actually discuss the size of the company in terms of the employees and revenue if you can?
We're a Series A company, so Series A means several $1 million of revenue.
Mm-hmm.
We have about 30 people on the team, and we're pretty efficient. We were cash flow positive last month, so
Nice.
we've kind of grown within our means, and really making sure we're not overspending. I think we're really on the right track. And just as we were just talking about before, like the excitement I had when we just Koyfin launched, the excitement I had was because I saw the future of it and where it's going to go. I still have that excitement, like looking at the product today, knowing or just having an intuition of the problems that we're gonna solve in 2 to 3 years, and it's going to be so much better in 2 to 3 years than it is now. I'm really excited about the product and about the company. So
And what does the growth come from? Is it the more you spend on promotion, the more growth there is, or like what's the right formula there?
yeah, so we haven't spent a lot of money on advertising, which we are probably gonna want to do a little bit more of. But the formula we've had was just invest in the product, be
Mhm.
close to our customers, create something they want. And so today we get a lot of just referral business, a lot of users signing up because they saw a chart on Twitter or saw someone tweet about it. This affiliate network that you just mentioned is something that actually became pretty strong and successful for us. And so because we have users and because we have influencers using the product and because our product lends itself to putting on YouTube videos and putting in blog posts and putting in Substacks, that kind of creates a nice little flywheel for the affiliate channel. And so that's been successful for us as well. And then ultimately, we'll have to kind of find some other channels. But I think we always want to be a product-led growth company. What that means is just have a product that solves problems that users understand solves the problem right from the beginning, and offering a free product so that users can understand what the UX, UI, what the feel
Mhm.
of the product is before they have to make that decision.
And I saw that Shane Parrish is an investor. How did that partnership come along? Because he's very well known in the investment field.
Shane is someone I've listened to for a long time and who I think is brilliant. We were introduced to him from another Canadian investor that's friendly with Shane, and I mean he was in the FBI or whatever the organization he was at, but he deals with Wall Street, he deals with investing, and so he understands kind of the field, and he saw the value. And I'm sure the fact that his friend was suggesting us and pitching us also helped. So that's how we met him.
God, now I'm sure like there is some traffic coming from him. And when you look at the long term, like is it the idea to replace Refinitiv, Fuel Bloomberg, or not necessarily? You totally can coexist. What's your take?
We're not going to be taking on Bloomberg anytime soon, just because Bloomberg is a totally different beast. And if you're paying $35,000 for Bloomberg,
Hmm.
you probably have the means for it. Bloomberg does, again, a lot of things really well. The fact that it's mission critical and just has such good support and uptime, it's going to be very hard to replace Bloomberg. Doesn't mean that it won't be done. I think every product gets replaced at some point, but in the near term, and near term I mean the next like 3 years, we're not competing with Bloomberg. We're competing in a totally different area, and so the area we're competing with is, one, we have a lot more business from individuals, and Bloomberg doesn't deal really with individuals. And then two, really focused on the analytics part of it, much more than Bloomberg. So kind of a different workflow. So those people that are interested in building dashboards and graphing and using Koyfin as their analytics platform instead of sucking the data into Excel. And then the last thing is just that segment of financial advisors, and Bloomberg is a very, very small player in the financial advisor space.
Do you see more competitors coming up, especially maybe not now, 2020, 2021, like when there was this heyday of SaaS companies, like the new SaaS company would pop up every other day. Did you see more of them pop up and then disappear?
Yeah, for sure. So there were definitely a bunch of companies that over the past 3 years have started to do similar things, focus on different points and different use cases. So, for example, filings and transcripts, and there's kind of like IR, and so
Mm.
different workflows that a fundamental investor might do. I think there's a lot of the space is very big. The wallet is very large, by definition, because you're dealing with investors and people who have money. And I think the incumbents, the existing products are pretty, just they're very old. They've been around for a very long time, and
Hmm.
so by definition they haven't innovated, and I think there's a lot of opportunity to create things that are better, lightweight, figure out how to incorporate AI into products. I think that's going to be really interesting for finance. That's still kind of, Bloomberg came out with their paper, GPT paper, like a year ago, right? And people were so excited, and then there's crickets after that. Like there's nothing that was actually implemented from that. So I think the power of AI and ChatGPT is really intriguing, and we're thinking through some kind of use cases on how to adopt it and what it means for us. And so we'll be playing around with that. But somebody's going to figure out a really powerful use case to do that. So I think this cycle of at first the product needs to fit into a use case, and I think initially that's how products get developed. But ultimately, the best products and the most innovative products basically change the way that they're used, or they change the use cases, or they change the workflow of the end user, because the product kind of enables that. And so I think that would be really interesting, but hasn't happened in finance. I think in finance it's kind of
Mm-hmm.
been the traditional workflow. So we'll see.
When you looked at this smaller competitors and like newer competitors, were there anything that they do that you like looked at and thought, why didn't I think about it?
There's nothing specific. Like I think we don't spend too much time looking at our competitors. The time that we really come across our competitors is when our users say like, these guys do this really, really well. You should, whatever. And a lot of times, like users are very myopic. They just, they don't know the big picture. They just care about the use case, which is great. But that's kind of like how I see features when people highlight them and stuff like that. I think SaaS software design is an art rather than a science. And I think it's interesting for me to see how other people are solving problems differently than I am. I don't think we have a monopoly on truth. I don't think, I think we have a talented team that creates a nice product, but I'm always willing to think about it, and I'm sure other companies have a different and interesting way of solving similar problems.
And when you think of the Koyfin, does it make sense for you to raise more funds? Is there a place to invest it funds to, or you rather stay where you are on already existing investors and gradually grow because you see that path as being maybe wiser and also non-dilutive?
Yeah, I think we have an opportunity to grow organically. I think the opportunity that I want to go after is really the larger opportunity,
Mhm.
of building something that you know has the potential to generate hundreds of millions and billions of dollars in revenue. And just because the market is big and the opportunity is there from a
Wow.
product perspective, from a user perspective, and so we want to get there faster rather than slower. So we are going to be, raising a Series A. Started talking to some investors about that, and yeah, we'll be looking to take on new, partner with new investors and be able to scale and build our product and sell our product faster.
The way I use Koyfin is I told you like before we start rolling. So I had this hypothesis about investing in certain companies. I'm not gonna I'm gonna tell the industry. I thought there is certain ratios that correlate to the stock price, and I had to go back 10 years to check it. The only way for me to do it is probably to either manually sit down and look at the quarterly data going back God knows how many quarters, or to use Bloomberg terminal. And it was kind of on the back of my mind. I just one day I'll talk to one of my friends and I'll go and check. So then when I got the question, when I started this trial, I put the screen where I was able to get all these ratios going back 10 years, and I align it with the stock price over the same period. And something that I had in my mind for so many years, I wanted to check against my theory, and basically was able to do it in 30 minutes. And I thought, man, it's just so weird that it took so long, something that can be done so quickly. So
Yeah, and
maybe,
that, and that yeah, that's the power of charting and data visualization and just being able to see kind of how things relate and trend. And charting is by far our most used function. And we talked about kind of the original, like the first use case was people being able to chart fundamentals and stock price and see relationships. And that was like the thing. They're like, wow, this is so fucking cool. I had to do this in Excel, or I had to ask my buddy in Bloomberg or to do this, and now I can do this and look at these ratios. So yeah, it's cool. And Like my favorite chart relating to that is if you look at the margins of semiconductor companies,
Mm-hmm.
they're very cyclical. If you look at the EBITDA margin of Micron or any semiconductor, it's super cyclical. And then if you overlay a time series of the forward return, so basically if you bought the stock at any point in time, what's your return for the next 12 months, right? So you could overlay that time series. You basically look at that time series, the forward 12-month return and the margin profile. And there's such a strong relationship between buying these stocks when the margins are low and selling these stocks when the margins are high. So kind of like thinking like,
Mm.
we all kind of intuitively understand cyclicality, or maybe some of us do better than others. But the fact that like when things are really good, the market's probably already, pricing that in. When things are really bad, you want to be buying and seeing that just on the margins, right? Because margins are the thing that are showing you kind of like where we are in the business cycle. Like every time the margins go down, you just buy, and 12 months later, you're up 150% on average, whatever it is. And every time the margins are peaking, you want to sell because margin is going to start declining. The stock isn't going to roll over. And the trick there is to actually know when you're at peak and trough, right? So in retrospect, it's easy, but when you're sitting there today, like, how do you know you're at trough and how do you know you're at peak and stuff like that? So, but visualizing that on a chart is just so powerful and so cool to see for 30 years or 20 years, just being able to see that relationship.
We'll see in like I'm gonna continue. I'm gonna start investing in that hypothesis I used. If I become very rich, I'm going to give you credit. If I get broke, I'm also gonna call you out. I'm like, hey, whatever you created ruined my financial being.
Koyfin doesn't lose money; people lose money. Just